You said as you looked forward to the Biden economic agenda as they were putting it forward, you saw three possibilities. Roughly one-third possibility of runaway inflation, one-third of a recession because the Fed had to react to that inflation, overreact to it, and one-third things would be fine. We actually went to Twitter and asked this week what they thought at this point, and basically what we had is 50% of the people saying they think runaway inflation, 50%, and then the rest were divided roughly evenly between a recession and not much at all. I want to know from you, given we have a lot more data now, where are you on the probabilities?
Unfortunately, I think the probability it's all going to work out well has come way down to perhaps 10 or 15%. I think the probability that, I don't know about runaway inflation, but the probability that we're going to have inflation for a while that's well above the 2% target, I think is about 50 or 55%. And I think the probability that we're going to try to control inflation and it's not going to work out and the economy is going to turn down more than we want, 30 or 35%. So I think the odds have gotten a bit more tilted to the bad outcomes and a bit more tilted to inflation than I thought. I say that because the inflation rates are up. I say that because markets have become more vulnerable. And I say that because the Fed's further behind the curve than I thought it was 10 months ago.
So let's talk about the Fed being behind the curve, because there was a piece on the Bloomberg this week that said, wait a second, we should track Volcker, but not so much in raising rates to really get inflation under control as reestablishing what was called credibility. That one of the things that Paul Volcker did was really reestablish the ability of the Fed to withstand political pressure, and therefore maybe it should stay the course, particularly with the new framework that Chair Powell put forward. What do you say to that if the Fed really did pivot significantly right now, it would lose credibility?
I think that the desire to maintain credibility when you've made a big mistake is the source of some of the biggest disasters we've had in the United States. That's what caused 55,000 soldiers to die in Vietnam. That's what kept us in a 20-year war in Afghanistan. What's most important is that policy have credibility as competent and able to respond to changing events. And that's what we need now. When the Fed put forward that framework, it had no contemplation that there would be COVID. It had no contemplation that we'd have record labor shortages. It had no contemplation that we'd have annual inflation rates on the CPI running above 6%. And so it has to adjust in the face of that. There's another lesson to learn, which is none of us know the future. And so confident statements about what's going to happen by public officials and confident statements about intention to act and what they're going to do rather than about objectives often turn out to be embarrassing.
So picking up on that uncertainty, as you say very wisely, we can't really tell the future. Part of what got us here was COVID and the pandemic and the uncertainty of that. That seems perhaps to be coming back in. We certainly see it in Europe right now with a lockdown being announced by Austria and certainly cases flattening out or even rising in parts of the United States. The Fed was concerned originally about deflation, in part because of the pandemic. What about the argument that we hear from the Fed, frankly, that we cannot tighten up too quickly because we may go back into deflation?
So I think, first of all, monetary policy is about balancing risks. The risk that we will go into some kind of chronic deflation in the next year or two, coming off 6% inflation with housing prices and the labor market on fire, is much smaller than the risk that we will need to crack down hard and the economy will skid into recession. Second, if we were to go back into deflation, we sure want the Fed to have some room to cut rates. And as long as they stay at zero, they're not going to have room to cut rates. And as long as they're still buying bonds, they're not going to have much room to step up QE. And so if we want to reload the cannon, it's time for monetary policy to be acting more firmly. If we want to be guiding against the greater risk, it's time for monetary policy to be acting more strongly.
Larry, let's move to Capitol Hill and the so-called Build Back Better package, which did move through the House this week, in part because they got that Congressional Budget Office scoring, which everybody said was so important. You've said in the past that part of the reason it's unlikely to increase inflation, Build Back Better, is because it will pay for itself. It didn't end up paying for itself according to the CBO scoring. At the same time, you take some issue, as I understand it, with one part of that scoring.
David, if you look carefully, the only real gap between the CBO and the administration's estimate that it does pay for itself that's quantitatively important is in the tax compliance area, where the administration's proposing overdue initiatives to raise the investment in the IRS. The CBO discounts those initiatives almost completely. They say it's only going to raise $120 billion over a decade. And here's what I'd say. A nation that can do everything the United States has done can surely close 6% of the tax gap, 6% of the taxes that are owed but not paid. That's all the administration is assuming. And it surely can do that at a time when we have so decimated the IRS that it has fewer auditors than any time since the Second World War, and the audit rate has been allowed to come down by almost half since 2011. Look, there's a competition between those who use information technology to hide money and those who use information technology to find money. And unfortunately, those who've been hiding it have been winning. It doesn't have to be that way, and that's what investing in the IRS is all about. This isn't just my view. This is the view of Charles Rosati, the highly respected former Republican commissioner of the IRS, and Fred Goldberg estimate that the right IRS program could raise $1.5 trillion, more than 3 times what the administration is claiming. There is a list of academic studies that show that, contrary to what CBO is saying, common sense prevails. And if you audit more people, not only do you get money from the audits, but other people are more careful in filling out their taxes. If you provide better customer service, people feel more committed to the whole process, and there's less tax evasion. I think it's almost I don't want to say unpatriotic, but it can't be right to think that over a decade we can't meaningfully improve tax compliance coming off a decimated agency.
Let me close today by asking you, that's a new idea of yours, actually. Outrage of the week. What outraged you this week, Larry Summers?
David, Bloomberg reported that we are only raising half as much money from the estate tax as we used to. Even as fortunes at the high end have soared, even as inequality has gone way up, even as more and more children of privilege are being able to live lives where they don't have to work because of what they inherit. I don't understand why progressives feel a need to move to exotic new schemes like wealth taxes when there's a lot of money to be raised and a lot of justice to be served by simply reforming the estate tax to make it work. And that's something where people who believe in incentives should believe in estate tax reform, because I don't think any American should inherit money in a way where they've got no incentive at all to work.